Good afternoon, everyone. Hope you can hear me okay. Let me know. So that's number one. Be sure you can hear me okay. Great. And in the YouTube room, I hope you can hear me. So just to let you know on what we're watching, this isn't about like what any stock is doing. This is about correlations. All I'm doing is going over what correlations I'm watching today. And so far, so good. So I don't know if a lot of you know one of the things I use against the bond market. So when I was trading on the floor, if we traded futures and we saw this, so far we're fine. We got stopped in one thing, 10 shares, big deal. But the thing is that when we were on the floor, give me 1 second, we would watch correlations like this. So we'd watch like what would make the markets go up. Well, or the Russell. Let's just take the Russell. The Russell is more interest rate sensitive for two big reasons. Number one, it has a lot of the regional banks and they're very interest rate sensitive. Number two, it has a lot of stocks that need to raise capital all the time. And the higher interest rates go, the worse for the Russell. The third thing, there are three reasons why the Russell's underperforming. The other one is this AI mania. So what's happening is they're sucking the life out of the IWM and the software stocks to buy the AI. But forget that for now. We're watching the bond market. There was like a 5-year note auction, obviously not so hot. So what I'm watching in here is this. So first things first, the commodity index. The higher the commodity index goes, and like I said, when I was a futures trader, if I'm in the pit, hell yeah, I'm shorting bonds if the Dow Jones Commodity Index is doing that. Or let's just put it this way. I'm less likely to believe this bull flag is a bull flag. So the more likely, the higher the commodities go, it's bad for being bonds. So what happens then? You see what happens. So the bond market is less likely to break this trend line right there, less likely to break to the upside if the thing that made it go down in the first place, which is the commodity index, is going up. So you're going to see that's a weekly chart. There's your bond market. See the slope? That's from the end of last year. When did the commodity market start to stabilize and go up? The end of last year. So the second this broke up, this went down. So now theoretically you could say, well, it's forming a bull flag while the commodities are up here and the commodities are this high and this is still higher than the low back here. Well, that's true. So maybe if this settles down, the long-term bond could go up. But for day traders, the higher this commodity index goes up, and I'll take a non-24 hour, just take the 20-year. And the higher the commodities go up, like you see, the lower the TLT goes down. I'll just put on a 15-minute. 15-minute, 15-minute. Second leg up, second leg up. What does that mean to me? Do not buy the indexes. So I don't care if the ES was up or not. I cannot buy the ES when the bonds are going down. I cannot buy the Russell when the bonds are going down. So at the moment, the bond traders are focusing on the DJCI. The 5-year note auction is focusing on the DJCI. Because why on earth would the Fed cut rates if the inflation's going up? That's crazy. In fact, if you read the front page of the Wall Street Journal today, the Biden administration, a lot of Democrats are begging Biden to stop doing a public relations campaign of how great the economy is and to start to be more empathetic toward inflation. So now they're doing surveys that everybody is saying inflation is what matters more in the election, not how good the economy is doing. So that's why the higher this goes, the lower the bond market goes. And, the more that actually hurts certain ways in the campaign. But the whole idea is this is bad for the bonds. The lower the bonds go, the lower the Russell goes, the lower the XBI goes. Keep in mind, this was up $1.50 today. That's why we didn't buy it. Now, why didn't we buy it? Because the DJCI was up. So our theory was, if this was up, even if the bonds were unchanged, you don't buy interest rate sensitive sectors. Now, let me just tell you, it's sort of humorous. Wait, give me a second. Yeah, it's sort of humorous is that when I was getting on, the TLT was here. The DJCI on the left was still up here, but the ES was up 6 points. And I'm like, what am I going to tell everybody? It's not really working. Well, what's going up? The AI stocks again. So just keep that in mind, that the AI stocks are going up. That's why I'm not touching the NASDAQ. The NASDAQ at the moment isn't interest rate sensitive. So it just isn't. And that brings me to this, which I think is really interesting. But I'm partial because I'm the one mentioning it. Here's the NDX on the left. Here's the NDX on a monthly chart. So you know about the rally, and I'm showing arrows for 2000. So I wanted to show you two things that I think are a big deal. Remember, back then it was all about commerce and internet and all that stuff. So just keep the NDX on the left. On the right, I'm going to try to show the monthly TLT. Now I got to show, let's see, ZB. Yeah, heck yeah. There's your ZB. See on how the ZB got nailed. That's October of 1999. A year earlier. That's because manias can go on longer than you ever imagine. So I'm not using the bond market for the AI stocks. I'm using the bond market to tell me not to buy the Russell yet. That's all it's telling me, no more, no less. So this happened a year before that. So then everybody's like, well, the transports are down for the year, then the NASDAQ should be down. No, this is the transports. Let me find it. I don't know why it's not working. It was working before, but the transports went down a year earlier. So just keep that in mind. The transports went down a year earlier. So why shouldn't the, in the NASDAQ didn't care. So just keep that in mind. It didn't care yet. So if there's a time and a place where it'll matter, but it doesn't seem to matter right now, does it? So just keep in mind that these kind of divergences. Now, I don't know why it worked back here. I'll show you. I put it on Stock Twitch and it worked. There you go. There's the Dow Jones Transports. That's 1999. See on how they got nailed? Here they got nailed on the left in 98, and the SPX temporarily went down. Here they got nailed, and the NDX didn't care. That's what I'm telling you. We're in a mania. So we're in that kind of mania, which means if I play something from the downside, it's not, by the way, I'm on Stock Twitch's Christopher Brecher if you care. So, but the whole point is, it's not the NASDAQ I want to screw around with. On the downside, I might as well play what's working, which is the AI stocks on the upside. So, but what it means is it's sucking the life out of the XBI and the Russell. That's all I mean. It's sucking the life out of that side. And that's probably going to continue until this. That's another thing I wanted to show you. So when we talk about divergences, positive and negative divergences, what you have to know in there is you might have negative divergences, but you need to combine other things. So the first thing I do is I go through all kinds of shapes and sizes and see if there's something I see that would have showed in 2000 and 1999, 2000. So now one of the things was my father-in-law begged to open an account to trade, watching me trade. So he opened a Schwab account, my late father-in-law, in March of 2000. Yep, right at the top. Right here. He opened a Schwab account. I can't make that stuff up. So 6 months later, NASDAQ went down 50%. He said I was a genius because he broke even. So maybe that was a sign of a top. So, but I'll show you a couple of other things. So NDX, you see the mania, but there was a tell. I'll show you the tell. Correlation, the transports were going down. The SPX was already wavering. The bond market was selling off, but the NDX didn't give you a tell yet. So let me show you something that was sort of a tell. Sometimes chart patterns can be the tell. And I'll show you. Trend lines. I just can't stress enough on trend lines. Usually what happens is the first break of a trend line. First thing, the more points of contact, the more important. I see more people trying to draw trend lines that way. So number one, you want it like 45 degrees. Number two, the first sell-off is usually oversold. It's the second one around the trend line. But this wasn't the only one that had that kind of trend line. So I'll show you. You go and put a wild one, Corning Glass Works, 1999. And what do you notice? The trend line. So another thing you do a lot of times with these wild stocks is you look for the big green candle. So you have that whole move up, you look for the big green candle, and then you look for the red candle that takes back half a green. A lot of times that works. But the key in here is the correlations, in that the bond market didn't matter yet, but it made me look for those trend lines. That's the key. It made me look for them. So that's where it becomes a big deal. So just, keep that in mind. So what do we do now with the markets? Number one, obviously, the note auction sucked. And it sucked because who on their right mind is going to buy a bond when the inflation's going nuts? And now the Fed doesn't look like they're going to cut. So, I've been calling that a long time, but there's a big difference between being right or making money. What I mean by that is the SPX right now doesn't care. The SPX and the NDX don't care. So I nailed the Dow Jones commodities mattering to the bonds, but when does it finally matter to the NASDAQ? I don't think it will. I think you're going to have to use a different correlation. So for the Russell and the XBI, I use the bonds. For the bonds, I use the Dow Jones Commodity Index. For the NDX, you got to use the big old NDX stocks. So I didn't, Genu, I don't know the bond auction sucked. I just saw the bond sell off. That's all I mean. Seriously, that's what I meant. It must have sucked. So sorry. It's not like I interpreted it like, so-and-so bid to cover. But you had to think it was going to be bad because that's rallying. So, so sorry. I just don't know. But getting back to it about the NDX, the first thing you're going to notice in the NDX is the stocks that made it go up are still going up. And I'm not trying to be glib about that, but I'm just saying that on a weekly chart, is there any sell-off in NVIDIA you see? Where do you draw the trend line? Where can you draw a trend line that tells you it's over? Well, there was one trend line. And when it broke, sure enough, you got a good sell-off of the NASDAQ. Not much of one, but you got some. So that's one. But the big deal is when the NDX was going up in 1999, 2000, were there stocks that were the leaders that were already getting destroyed before the NASDAQ did? So the first thing is when you see this kind of thing and you don't have any trend line you can draw, and that's the leader, I'm telling you right now, it's extremely difficult to play the NASDAQ to the downside. Now, if I see a big red candle in here, maybe intraday. We did great on Friday playing NVIDIA Ultra intraday. But until I see that trend line, I can't do a swing short. That's what I mean. But let's go back just for laughs and see if some of the stocks that made it go up back then were already going down before the broad index did. I love doing this kind of thing. Well, guess what? No. In fact, when this topped, still doubled. Yeah, isn't that amazing? So then what was the one I showed earlier that was crazy? That went from 19 to 2,500. What was this stock I showed? There you go. ITWO. Went from 19 to 2,700. What do you notice? It never had a trend line. So when did that top out? Believe it or not, the same time the NASDAQ did. They did not lead to the downside. So you've got to wait for those trend line breaks. So believe it or not, this went almost to a new high. JDSU is another beauty. Now, I got to tell you, I love JDSU, and thank goodness I never bought the hype. But I thought it was an amazing stock and was going to be, just go crazy. And as you see, these went up. They all sold off similar in March of 2000, but they didn't give it up quick. It's because you got to have that trend line. It's really hard to short this at 838 when it was just 1100, but you have to wait for those defined trend lines. At least that's how it looks to me. So, and thanks, Steve, for bringing that up. So, and Mike, thanks for mentioning about Santelli. So, but definitely, I have to see those break first. And I'm not seeing them break. So it's really hard to even think of playing the NASDAQ. The way that people are losing money right now is by trying to buy the Russell to make up for the NASDAQ. All I see is there's certain sectors that go up like this. I'll show you. Do you mess right now with the pot stocks when the pot stocks are going straight down? No. Do you mess with VKTX when bonds are getting hit? Well, I bought all of 10 shares, and keep in mind on our live thing, if I say tiny, it usually means shares. When I saw GME sell off, it just, that a lot of these small ones are just not going to work. I mean, some of the other high short interest. But if bonds rallied, yeah, I'll look to buy the biotechs, but it's hard for me to do a swing trade in XBI when the bond market's going straight down. So all probability, and the probability that the XBI plays catch up goes down dramatically if the bond market goes down. Doesn't mean the whole market has to go down, but it goes down dramatically. So, keep that in mind. I had to do it. I bought more VKTX. Just a bull flag is a bull flag. I had to do it. I don't have a lot of it, but every time this stock has that kind of pattern, it goes up. So, of course, this time I probably won't because I'm saying it publicly, but I'm watching that. I'm watching that. Doesn't mean I'll be in it overnight. They could have bad trial news. But intraday, XBI going down, this is going up. So here we go with a negative correlation that if the bonds rally, maybe VKT lead. But I'll tell you, I am not buying the ES. I am not buying the Russell. I'll buy a special situation, but I cannot buy the XBI or the interest rate sensitive groups when the bonds are getting crushed. So that's how I look at it. And the probability of the ES catching up or the Russell catching goes down dramatically if the bonds are on their low. So at least you have the sort of correlations I'm looking at. And that's how I'm trying to trade. Now, on the other hand, you could say bonds are down 30, and guess what? The markets don't want to go down. Well, I totally understand that. Totally understand that. And then you might say, well, if the bonds rally, this will go crazy. Yeah, maybe. Maybe. I'm not sure I want to play that. And another thing, correlations. I don't know if you call this a correlation, but the put call ratio is really low. Usually when it's this low and the bonds are down this much, usually the markets don't move much. That's when you look at neutral ideas. So, hey, Mitch, I hope you're doing well. So at the moment, the ES, what's going to make the ES be down 10? Well, probably the bonds down 110. What's going to make the ES be up 10? Probably the bonds are only down like 19. So that's where we are at the moment. That I don't think that you play the markets one way or the other at the moment. And what's sort of ironic, I'm on the central room at 2, and I don't have a clue in here. And the reason I don't have a clue is because the SPX refuses to go lower with the bonds going lower. So it puts you in a pickle. Now I'll show you why it puts you in a pickle. It puts you in a pickle because on the one hand, you're saying the bond market's getting torched. The SPX isn't going down. But what happens if the SPX starts to listen? It'll be down a lot. This is a violent move on this side, on the left side. Violent. If this goes down, it's probably going to go down 20 points. So I'm at a loss of what I want to initiate unless it's something small. And that's where I am. And I'll give you yeah, that's right. Now there's an interesting thing here. There's one side that says the economy is moderating. You've had certain things saying that, and that hurts the transports. So on the other hand, I don't know about you, but how on earth is the Dow Jones Commodity Index doing this? And the truckers are going down. You would think commodities would help the truckers. And you would think commodities would help the mosaics, the fertilizer. But it's not happening yet. We're long mosaic. We're probably going to get stopped out another thing, tiny amount. They just don't have that structure. So, and then I have another one for you. So and here's a good correlation. So you have XLU going up. Now, I gave this idea last week. So First Solar had an article in Barron's about that's an AI play because of energy. So you need backups. So, solar instead of just other stuff. You have utilities going up because of AI, demand for power. So then they did the secondary of First Solar. So you might say, oh, all the solar stocks moved. I missed it. Well, we called this before they rallied. RUN. We called it down here. It was a delayed reaction. Now, maybe they don't do the same thing as First Solar, But it didn't take a lot for that kind of speculation to bleed into that or end phase. And that's what happened. So just keep in mind, though, it's a lot easier when they form bull flags. But keep in mind also that First Solar had already gone up a lot. And these were going down. Nice positive divergence. There's another kind of correlation. If some in the similar group go up and the other ones form a bull flag, then they're more likely to break up because the leader is going up. So I'll give you another correlation that hasn't worked yet. So if you have this giant demand for power, you got the utilities, you got the solars, why on earth, and uranium for that matter, why isn't this going up more than it is? And why isn't crude oil going up more than it is? And why isn't corn going up? Ethanol product. So, I would watch this. We're long the corn ETF. Not a lot. We're breaking even. But you wonder about those correlations. So now, if oil has this, so it looked like a bear flag, and now oil is trying to break up. That's in the Dow Jones Commodity Index. I'll show you. So there's oil going bonkers today. See on how it failed the bear flag? Bear flag against support isn't to be trusted. If this gets over that rectangle, so everybody that shorted on the break of the rectangle is stuck. If it gets over that, you got to think, things like corn and solar keep going. Yeah, but you wonder now if grain prices starting to go up is going to help Mosaic. So let's look. No, I got to be off in a minute. But basically, if grains, remember, we were long a lot of wheat. Lots of wheat. So we're long wheat from the breakout right in here. So we've been long wheat for months. Actually, we got in a little early. But we were long wheat, and you got to think that that's helping CF finally come back and NTR finally come back. I mean, that's still going nuts. So the one that's lagging is definitely Mosaic. So, just keep that in mind. So that's where I am. I know I have to get going in a minute. Still, I'll be watching this today. I'll be watching it. The bonds are only here. And the ES on a 15 and a 5-minute chart futz around in this area. I'm more likely to short the ES under this area when it's decisively down. And that's the way I look at it. So thanks for being with me. Like I said, I'll be in the central room at 2. So, and then I'll be in the Chart Patterns Mastery at 3. So take care.